Hello, I'm Joseph Gillette. Today we're going to look at how to identify a scammer. They say in the investment markets there's two things that you have to watch out for. Time bandits, that's people who steal your time, and scammers, that's people who steal your money. So how do you know someone's a scammer? Because obviously if you ask someone, are you a scammer? Are you a criminal? They're not going to say, yeah, call the police, I'm a scammer. They're going to say, no, of course not. So here's where it becomes really tricky. So this list is a good list that you can take to the bank. Number one, the principal, and the principal just for the sake of people who are not following financial services, if I'm offering you an investment, I would be the principal. The principal could also be the owner. So principal can be the CEO, like main person who's connected to that organization, or it could be the owner. So an organization can have multiple principals or it can have just one. We like to use the expression of the bacon and egg breakfast. The pig is committed, but the chicken is involved. The pig is the principal. So one way to identify a scam, the principal doesn't want to show any due diligence. Can I see the documents, you ask? And he says, no, I'm not telling. I'm a confidential person. Let's meet in person. Number two, insists meeting in person. When you email documents to an investor, the first thing that they do is send them to their lawyer. So the reason that a scammer doesn't want to send you any documents because he's going to send it to his lawyer or his financial advisor to look at it. Is this real? Smart investors have advisors. Smart investors look at something and they have someone else look at it. It's a third party. That's the biggest mistake new investors make, thinking that they're smarter than everyone in the room. You're not smart. The biggest sign of a high IQ is admitting how stupid you are. Assume that you're the stupidest person in the world. I know nothing. Warren Buffett says this all the time. Explain it to me like a 5-year-old. Explain to me in crayon drawings how this investment works. If it's complicated, he doesn't invest in it. And this is the reason why scammers insist on meeting in person and don't want to email any documents, because they'll be sent to advisors and lawyers who are very smart and can immediately spot the scam. Sign number 3, does not have a public profile, keeps a low profile, doesn't have a social media following, is never in TV news, never wrote a book. There's no public way you can identify this person like Bill Gates or some millions of people. He doesn't have to be famous. I'm not saying that you have to be famous, but if you Google someone, you should find something. Facebook, anything. Sign number 4, does not have a lawyer. Any investment business is a regulated business. So if you give me money, if you buy my house even, there are laws that regulate the real estate market. So no matter what kind of investment it is, there are laws that pertain to that investment. And for laws, you need to have a lawyer. So if someone is offering an investment to you and they don't have a lawyer, that's a huge red flag, because a lawyer has to submit the investment offering to the regulators. In the United States, that would be like a Reg D filing or Form CF, Form C for crowdfunding, for example. They have to draw up the contracts, the offering memorandum. Lawyers have a lot of work in the investment business to do. So if someone's offering an investment and they don't have a lawyer, or a lawyer doesn't send you the documents, or you can't ask his lawyer any questions, huge red flag. Sign number 5, high returns that sound too good to be true. 30% in 20 days. We call that a high yield investment program scam. Sign number 6, has lots of stories but no documentation. You see, I was walking in the forest and I tripped and fell and I saw a leprechaun and the leprechaun gave me a pot of gold and the pot of gold just keeps growing. But I need $1 million because the leprechaun broke his leg and he needs to go to the leprechaun hospital. Does the principal have lots of stories and doesn't have any documentation? That's a huge red flag. Because when you look at serious investment opportunities, it's the opposite. No stories, all documents. Sign number 7, the principal is not registered. So this by itself is not proof that it's a scam. But let's put it like this. The greater majority of legitimate investments are either registered fund managers. So if you're investing in a trading strategy, they're a registered CTA, commodity trading advisor, or another type of manager. A registered investment advisor, for example, RIAs manage stock portfolios. If it's just a startup, they might not be registered, but they're going to be working with a registered broker dealer or an investment bank or something like this. So not being registered is not like proof that something is a scam, but 99.99% of legitimate investment opportunities are going to work with registered people because it's a regulated business. The investment market is a regulated business. Take any startup, Uber, Airbnb, any of the big startups that were successful had tons of investors and they had tons of investment banks. In fact, the more successful and the bigger investment opportunities in private markets may have multiple broker dealers. They may have multiple investment banks. They may have a whole team of lawyers. They may have even a compliance office. So if someone doesn't have all this, that's a very big red flag. Sign number 8 uses words like arbitrage or bank guarantee or insurance. So let me explain a couple things about arbitrage and bank guarantees. Arbitrage is when you have risk-free profits, which are really not risk-free, but they call it that. That's the definition. For example, you can buy gold in London at $100 and sell it in Singapore for $200. That sounds good, but it's so rare. You can't imagine how rare arbitrage is. It's like getting struck by lightning or winning the lottery, or maybe even less likely, because all of the markets in the world are basically manipulated, okay? Let's just call it as it is. Central banks control the money supply. When central banks create US dollars or euros, they put it into the market through banks. So if there's any kind of discrepancy on price, those banks that put it into the market are going to just soak it up. They're not going to give that to their customers. They're going to capture it for themselves. So if an individual trader or a person discovers arbitrage, it's almost like impossible, because if there was, I mean, arbitrage does exist in the markets, but the banks who control the market and the broker dealers and the hedge funds are going to seize on that before it filters down to the average retail investor. And the reason is because everything's electronic. So if you have a hedge fund or an investment bank, something like a Citibank or a Goldman Sachs, they have real-time price data for every market on the planet. I mean, there's no market that Goldman Sachs does not monitor. So if arbitrage happens, it may happen for a few seconds. They're going to be all over it. They're going to have the capital ready to deploy. They're going to have a professional trader who's paid $1 million a year to snap it up. The point is, if someone is offering you arbitrage and you only need to invest $10,000 or $50,000, it's most likely a sign of a scam, because Goldman Sachs, who has access to arbitrage opportunities, is not offering it to their clients. That's part of their bottom line, and you can see this on their reports and in their financial statements that they make. Sign number 9. The person explains the investment has no risk. That's impossible. Even arbitrage has risk. Because in arbitrage, what happens? You buy and sell at the same time. One of your orders might not get filled, and then you would have the risk of holding that one side. So let's say you're buying gold and selling gold in the same moment at two different prices in two different markets. What if you get filled on one order and you don't get filled on the other? So that's just an example of how there's even risk in arbitrage. So anybody who says that there's no risk is lying. Even if a bank tells you that there's no risk, that's a lie, because the bank can go out of business. Earth can be destroyed by an asteroid. I mean, there's always risk. The risk may be very low, maybe very low risk, but there is always risk in investing. Even if your money is just in the bank, you have inflation risk. So let's say you keep all your cash in the bank and it's gaining 2, 3, 4, 5% interest. But the inflation rate is 20, 30%, which it is in the United States almost. But in countries like Turkey and Argentina, In Zimbabwe, inflation can be who knows how high, 50, 100%. In Venezuela, inflation is huge. So even if your money is in the bank, and the bank is a huge bank, and it's safe, and it's insured by the FDIC or whatever, you have inflation risk. So there's always risk in investing. So if anyone says this investment has no risk, they're lying. Rule number 10 is a private, confidential person and only wants to share documents in person, not electronically. Huge risk. Sign number 11, looking for in-person referrals. This is a sign of a fraud or a scam because you don't want to put anything electronically, because like if you're a scammer and you send me your documents that I can analyze like a financial expert, or send to my lawyer or my friend who is a professional lawyer who looks at scams every day, who's a securities fraud attorney, it's going to open you up to that risk if you're the scammer. So you're not going to want to send any documents. You're going to want to keep everything to a whisper kind of referral thing where we're going to go skiing and we're going to go out to dinner and I'm going to get you drunk on too much rice wine and then take you home, and then you'll just wire the money. Oh, you have to, and you have to wire it tomorrow. I'm gonna add another one to this, which is signs of time, deadline, or hurry. If you're being pressured, like, oh, this opportunity is only going to last for another week because I've got a whole line of other investors who want it, that's another sign. Rule number 13, operates from a dark jurisdiction like the Seychelles or Argentina or some non-G8 country. And again, these are signs. There are many legitimate investment opportunities in Argentina and maybe not in the Seychelles, but just by being in the Seychelles doesn't make you a criminal or a scammer. But if you're wiring money to the Seychelles, that's a huge red flag, because all of these dark jurisdictions have zero regulations. So you wire money to the Seychelles, it's a black hole. You can't sue anyone. There's no regulators. Argentina is the same thing. It's like wiring money to Russia. I mean, there's regulators in Russia, but practically, if you invest in a Russian scam, you're not getting your money back. Rule number 14, uses big names like, I got into this because of Bill Gates. I can tell you guys stories about scammers using Bill Gates and Elon Musk and other big names to run their scams, but the list is just way too long. The point is, if your principal that's offering you the investment is using some big names or referencing some big things like, oh, this is where Bill Gates invested and he made $1 billion, but it's his big secret, that's a huge red flag and the sign of a scammer. And again, all of these things are just signs. If any one of these things is true, that doesn't prove that something is a scam. This is just signs. What to look for, signs of a scammer.